This is Duke University. The formalization of the impact investing space, I think in the last 5 years, has started to happen. Conversations like what are the metrics that we are supposed to be tracking to understand what impact is. This is a conversation that's evolved a lot. I'm not necessarily sure that we're closer to the answer, but we're certainly putting the tools together to make it more coherent. And we're also at a space in the industry where we have enough depth that funds and different practitioners are starting to develop real track record. So both on the financial return side and the impact side. So we're still at early days of the impact investing industry, but whereas 10 years ago it was very much of an idea and a dream, today you have more of a reality in terms of actual results. And we're trying to look at that data and understand the results to see what it means and answer the questions that everyone in the industry is talking about, like are there trade-offs between financial return and metrics and so on. We measure success in two main ways. One success metric for us has to be financial return. We are a fund that believes that there are segments that you can invest in where you don't compromise financial return because of the good that you're doing. And therefore, we have to look at return on investment, IRRs to our investors based on, investing money in companies and then exiting them and returning money back to our investors. The second bucket by which we measure success is impact. So for each company that we invest in, we try to get a sense of three things. One is, who is the customer that this company is serving, and do they in fact belong to an underserved segment? And we look at staying true to that. The second is there some measure of value that they're creating for that customer? And you can measure this in different ways depending on whether you're a financial services company, a healthcare company, a housing company, and we'll look at a metric there. The third metric is really about growth. So for us as a fund, in order to be successful, this is our own definition, we have to reach a lot of people. One of the very big questions that we face in the social entrepreneurship space or the impact investing space is what kind of capital is appropriate for you to deploy against a certain outcome. And there are different sources of capital. There's philanthropic capital, there's commercial capital, and there's a spectrum in between. And my finding, in the limited time that I've been operating this space is that different kind of problems and different kinds of outcomes require different kinds of money. So you may have a health intervention that has incredible results in terms of the health impacts on people. You can build a model which gets to break even and therefore is self-sustaining. Should a venture capital firm be investing in your company? Probably not. If you can't generate the kind of margin that would generate a financial, return of X, you shouldn't be trying to attract commercial capital that expects a return of X. You should be trying to look for a different capital provider to get you to that point. Within our team at Elevar, the individuals who come to work for us are able to identify with different aspects of our work and to speak different languages, if you will. We have a mix mostly of people with finance and corporate backgrounds, and because we're in the investing world, it's very important that we be able to run the investing side of our business with all of the legitimacy, professionalism, knowledge, and skill set, of a true investing house. At the same time, the customer base that we deal with is all at the low-income sector. We go out to the urban slums, we go out to the rural villages, we walk through dirt roads, we talk to people who have very little in their lives and who are working very hard, and if we don't have a personal connection with them, then we can't truly understand their needs and have that inform our investing practice. We also work in an ecosystem because we're talking about low-income sectors and we're working mostly in the emerging markets. We work a lot with regulators. There are political forces at play. We have to be savvy about the political landscape and environment and understand how to guide our companies and talk to regulators and talk to sort of the political elements that are interested in low-income communities. And finally, we work in an ecosystem that is quite different from what I'll call the mainstream investing ecosystem, and we need to understand the language of our ecosystem and how the approach that we take is not just a pure financially driven investing approach, but one that encompasses social, economic, and environmental good.